All right, this is going to be a video journal for the beginning of September. I'm going to try to do some ICT stuff and analyze this instrument based on ICT technicals. And rather than doing a writing journal, which I will probably end up doing, but right now I'm just going to try to do a video journal because it feels more comfortable to start out with. So, monthly chart. Obviously, this is a bullish asset in the long term, and in the long run, I am expecting prices to move up. However, it is respecting this breaker block right here and this fair value gap right here. This is a SIBI, right? A sell side imbalance, buy side inefficiency. It's respecting it. It respected it, came down, but also respected this BISI right here. So to me, based on this alone, it's hard to say because I know the long run it wants to go this way, but in the short term it could continue lower because there's another BISI, or yes, another BISI right here that it could want to seek. I wouldn't expect it to seek that immediately after seeking this, so if anything, it could potentially be like April, where it ranges. The next couple months could just range slowly and then grind higher slowly. I think there's a high probability of that. So there's a high probability that it's entering a ranging market right now where it's going to kind of chop a little bit because there's selling pressure from above, but there's also buying pressure from below, right? So the buying pressure will weaken this SIBI. That's what I believe could happen. Okay. Now, there's another possibility. It comes down here. If it somehow closes below the low of this candle, I believe that it will actually crash lower, which I think is a very low probability, probably less than 5% chance of that happening. So I think the most likely thing based on this is just some ranging market and then a breakout to the upside, probably near the end of the year, and then continuation to all-time highs by sometime next year. Early next year, probably. We'll see. Okay, now down to the weekly chart. Probably the same story. It's respected this breaker actually quite well. This breaker candles, you can see it never closed above that breaker. So to me, again, that's a bearish signal. It's respecting this SIBI still, even though it doesn't appear obvious because it traded up into the wick, but sometimes that happens. Also notice there's a inversion fair value gap right here, this candle, and there is one right here as well, by the way, but it respected this one. It actually closed above the fair value gap, but actually not above the open of the next candle. So it closed within the wick of the fair value gap. I consider that still respecting the fair value gap. It's just not super clean, but it's just by a little bit, right? Just by, you know, less than like, I don't know what that is. Like, it's like 10, 15 points or so, I think. So, all right. So it still appears to be respecting this SIBI, sorry. It took out these relative equal highs. There's a market structure shift to the downside. There's actually no SIBI here, but it's respecting this wick and that wick, and I know that this wick and that wick are indicating a SIBI on a lower time frame most likely. So again, this to me is looking kind of bearish. It closed, it did respect this fair value gap candle's low though. It also did. So again, and it moved away, which could be bullish easily, right? Easily could be bullish from here. But also there's this nice juicy fair value gap right here that it this BISI that it probably wants to use, although it could just be a breakaway gap. So, perhaps this is a breakaway gap, and actually now I'm noticing there's a fair value gap right there. So inversion fair value gap plus fair value gap equals BPR breakaway gap, right? Or it could. Okay, now down to the daily time frame. Did not close below the low of this fair value gap candle on the daily, right? Came down here. It never violated that. So that's kind of bullish looking. However, this is definitely bearish looking, right? Respected this one. Now it's respecting this one. It's in a premium. Could seek a discount. Now again, the discounts that it could really seek are right here or right here. I would say this looks nice, but the thing is, I would be not surprised at all if it never comes back to this price level ever again in history. Or if it does it way later during a next recession. But it could never touch these again. I don't know though. Wouldn't be surprised if it does, wouldn't be surprised if it didn't. Kind of 50-50 on that. I think there's a greater than 50% chance that it comes into this BISI. I also believe that if it comes into here, there's greater than a 50% chance that it continues higher. Ultimately, maybe not right away, but ultimately will grind higher, violate this. One thing to be noted is there's a gap right here, volume imbalance, but it's, intraday, so it's an actual gap. I mean, it's been the wick. Okay, so let's just call it a volume imbalance. There's a volume imbalance here that hasn't been touched. Okay, and there's also one here. So what I know about them is they tend to be rejection levels where price will come up into them, sometimes go well past them, but it will ultimately close back on the other side of them. And so there's one right here and there's one right here. So I think it's gearing up for some chop in this area. But also I do know that these are going to be draws on liquidity. So I think price could easily come down here, reject from this BISI, and then come up to this SIBI again and to this volume imbalance, reject from there, and then I'm not sure what'll happen, but it'll probably ultimately, I know eventually in the long run it has to come up through this, reject from it, come up to this, probably reject from it a bit, and then eventually grind higher. But so just based on all of the footprint that has been mapped out by price action, it really looks like price is going to want to go higher, but it's going to find some resistance along the way. So that's why, once again, to me, this kind of is saying this could be a ranging market for a month or more, right? So something like April, right? April, even though it doesn't, it's different conditions there. It just, for April, it came up into this SIBI and then above these highs and then rejected and then came down and then came up. Even though there's not, there's not obvious volume imbalances or anything, it came up above a big liquidity sweep, went down, but price was bullish, so ultimately it respected this fair value gap. As you can see, it respected it, but it closed below the fair value gap, but within the candle, and it still respected the body of the previous candle, right? So ultimately, price reacted to that, but the narrative is bullish, and that narrative bullish is still playing out. On a fundamental level, I believe that this movement right here is basically baiting in more shorts, scaring more people out of the Nasdaq, S&P 500, Dow Jones, that kind of stuff, because basically what happened is the banks and news media and the powers that be engineered a recession, scared people into money market funds and savings, high yield savings accounts at the end of last year. People, retail and essentially retail and like mutual fund type investors and all that kind of stuff, trust fund investments, all that managed by the powers that be. They moved all of that stuff out of stocks and into cash for a loss, and bonds for a loss on the stock positions, sold them for a loss. Who makes the difference? The powers that be. So they moved everyone through one means or another, whether it was the news or being a financial advisor, whatever, they employed their systems to move everyone out of their drawdown positions in stocks for a loss, moved them into high yield savings and treasury bonds, which are going to yield a positive return on their cash, but not after it's inflation adjusted. People started to catch on to that after the market rallied very hard for the first half of this year. Bank panic scared enough people. The bank panic masked the bull run, right? This baited enough shorts, which fueled people getting their faces ripped off by shorting, buying puts, betting against stocks and stuff, right? Fueled the move for the powers that be to make money on the upside. And so essentially we kind of have the same thing happening here as we did there, even though there's not a bank panic thing happening here. The same kind of move can happen, and then they just, same type of move, different story, different day, right? So more people convinced that the asset that has never completely crashed ever and has always gone higher in the long run, more people convinced that it's going to crash forever, get short, essentially get sell stops or sell orders to enter into the market to provide buying, to be the other side of the buy orders on the institution level. And so, yeah, I do believe it's going to go higher in the long run. I just think that with this kind of stuff right here and right here, it's going to, it's not going to do it quickly like it did the first half of this year. It's not going to be quick. It's going to meander around. People are going to be confused. There's a lot of people, probably decent traders, who are expecting the bull run to resume, and they're waiting for that. So they're going to want to confuse those people. And then there's also going to be people who want arguments for a short. So they're going to try to add confirmation bias to short sellers before ultimately a run, an aggressive run higher eventually happens, which I believe could be end of this year, beginning of next year. Now, this is a lot of theory. I can't say for sure what's going to happen, but obviously play it by ear. But I'm just saying this is based on what I see. I see resistance, but I also see an intention to go higher. So it's just a matter of how low is it going to go before it turns around, and how quickly is it going to go to all-time highs once it does turn around. Now, after that level gets exceeded, the 16,500 level is going to be the next area of resistance. There's a volume imbalance here too that will probably serve as a rejection level. So again, there's a decent amount of quote-unquote selling pressure ready to happen once price gets to certain levels. So it's got, there's a lot of intention that must occur in order for it to actually get to all-time highs. And for all we know, it could still respect this once it gets to that level as well, sell off a bit. So I could see the market getting kind of slowing down in terms of its directional movements, and probably just enter a more ranging type market, maybe slowly grinding higher after rejects from a resistance, goes back down to whatever fair value gap or order block is created, then grinds higher, rejects again. So I could see it slowly grinding higher for the rest of the year. I think that's the most probable outcome. Okay, let's drop down to the 1 hour. I'm going to turn off the IDR because that's going to be in the way. Okay, from an IDR perspective, just took out these buy stops right here. Price kind of is rejecting from there, from this SIBI right here. So decent chance of a sell-off in the short term over the next couple days. Market opens on Tuesday because Monday is Labor Day. So I think high probability chance that it sells off continually down into Well, one of these BISIs. Could just be this one and reject from there. Most likely, the highest probability civvies for it to actually sell down to and then reject from would be, in my opinion, would be this one right here. And I think most ideally, the best low risk buy entry would be this one right here. If price will come back down to this fair value gap right there, this BISI, I would expect a very strong reaction from there. Because that's the last hourly BISI before for a while on the that's below. So that's kind of like the high reward, low risk discount buy for institutions to get in. And yeah, I just could see some very powerful stuff happening there. Also remember there's an inversion fair value gap there, which will also have an upward pressure on price, or whatever you want to call it. So the overlapping of these two fair value gaps, I could see price coming down essentially right to like there, which is about the 50% level of this fair value gap. So if we take a fib tool and we go to 50% of that level, we get, well, this isn't going to be perfectly accurate. Let's make it cleaner. Okay. So I'm just going to dive into an analysis of this fair value gap. So 14935.5. So I'm going to put a horizontal line there. It's close enough. Okay, now we're going to drop down to the 15-minute time frame. And okay, 15-minute time frame. Well, there's actually a lower one, so could see it rejecting from there. But also, now that we see on a lower time frame, to get more accurate, there's actually one right here, and there's one right here. So if we're talking like most low risk buy, now we're entering these areas. So if price, I don't think it could get down that far, but if it does, these kinds of, I think honestly, you could just overlap these as one giant. I would say that area becomes a very ideal long entry position or spot. Let's drop down to the 5-minute then. What day is this? 28th? Okay, 23rd. 23rd of August. All right. 23rd of August. Okay, so now we come down and we've got this level right here. So like basically 14830 seems like a good place. All right, so I'm going to put a line there actually. And then let's go sooner. I mean, go down to the 1-minute time frame, and that was I said 23rd, right? Or was I wrong? Okay, hold on, I'm lost. What did I just do? I just got lost. Damn it. Damn it. Okay, I think it's right here actually. $149.30, right? Okay, so because hold on. Oh, I was okay. Yeah, I was 100 points high. Wait, what is happening now? Wait, I think I screwed that up. I definitely screwed that up. 25th of August. That's why I was screwed up. Okay, what the hell? Okay, I think I made a mistake, so bear with me. What I'm seeing on this time frame as the best buy is going to be 14868. Right? Or is it, was I going, what the hell's going on? Damn it, I lost track. This sucks. Okay. Let's go back up to the hourly, because I know I'll see it on the hourly. Hourly, I was... hourly, I was targeting this, then okay. And that's on the 25th. Okay. So let's go to the 1 minute on the 25th, because then I'll find the best imbalance to be at. Okay, here we go. So if in terms of the best risk reward entry you could probably get, which I don't know that the market will give this to you. Okay, it probably won't. But if you want to know, no, it already did that. Wait. Okay. Here we are. That's the final low, right? Where was the final low? Okay, it is. All right, so here's the final low. The most low risk buy entry that you could get for a fair value gap that hasn't been completely accessed yet. Well, this one has basically. Well, you'd be really lucky if you got this candle, 14814.5, but I would have that marked out. If it comes down to right here, this little tiny imbalance right there, a price could reject very strongly from there. It's probably not going to revisit that, so we're going to have to look for the next fair value gap. Okay, so right here. So 14865. If you want the best possible risk, I would say you get about a 4-point entry zone. I would say a close below the low of this candle or this candle before it. So you get about 10 points of risk. Well, the close could be lower than that, but you know, 10 to 20 points of risk, 15, 20 points of risk for a rejection level with contracts that you could hold overnight for, well, the rest of your life, basically, if you wanted to. But, so yeah, let's see, 1486. Okay, so I would say unlikely that it goes down that far. I would watch those areas for price rejections. You might lose one of those trades, but the risk to reward is very high, because if price rejects from there, then you could target this volume imbalance as right here, or the filling of it actually. So you'd target this as your first take profit. You would target this as your second take profit. You would target this high as your next take profit, or you'd actually probably, to be safe, you would target this body, because sometimes it doesn't go to the wick. So this would be your next take profit, and then this would be your next take profit, and then you would also have a target take profit at the filling of this volume imbalance right there. And then your next take profit, well, again, it depends on how many contracts you have on, but then your final take profit, or not final, but your final target area would be, that's already been mapped out, it would be all-time highs right here. So I don't know if it works out like that, but I'm actually going to save those levels on my chart. I think they have a very strong probability that if price enters those areas, those will be very, very high reward, extremely low risk areas to try to take a trade from. Can't guarantee we'll go that low. Could easily just reject from, well, if you also look, let's look at this. This is another area where there could be a rejection because there is a tiny fair value gap right there on the daily chart. So if we want to look lower, that's 28th of August. Let's go on the hourly chart to 28th of August. Okay, so 28th of August, hourly, it's right about the end. It's already been used, as you can see, though. It kind of tapped into it right there, so it might not be used again. It could just go right through it or never even get back there again. But sometimes they get used multiple times. So if we drop down to the 15-minute, let's see, 28 August. Okay, there's no fair value gap there. If we go down to the 5-minute, 28th August. I see one right there, more up here. Didn't close below it, but this fair value gap could be respected right there. So I guess we would mark that out. And then if we go down to the 1-minute, we will see 28th August. Hold on, 28th August. It was at the end of the day. Right here, okay. All right, so then I'll change the color of these just so they're differentiated, but that's not very bright. I'm gonna do this just because. Okay, so I would say this area also could be a high probability rejection level. If price comes down there, you have very low risk, very high reward. You've got a close below this candle, so you got about 10 points of risk. Looking for, you know, hundreds and hundreds of points of reward if you can hold overnight. So yeah, that's what I'm kind of seeing. So these are levels to watch. Where I've drawn my lines, that kind of looks convoluted on the daily chart, but you know, you just saw how I got to all those. So those are the levels I would be looking for to be going long. Until it reaches there, I think it's fairly safe to try to enter a short now. You could lose, but I think, you know, going for a short at least to here as your first take profit, then you move your stop loss to break even, take it to the bottom of the fair value gap, or to, you know, to this volume balance, or, you know, targeting this one anyway. And then once it starts to shift from there, if you're allowed to take positions on both sides of the market with your broker. I don't think hedging is legal in the US, so I don't know how to do that, but I'd be looking to short it, maybe have multiple brokers. So I would be looking to short it on one of my brokers. If I'm not live trading yet, but I would be looking to short that on one broker, taking partials and moving stop to break even, and then be starting to look for reactions to the upside. I could see it becoming bullish from here, or any of the levels that I've shown. Also, actually, there's a volume imbalance right here too. So that's definitely a high probability draw on liquidity. So actually price could end up rejecting from there. So let's actually dive into that real quick to get one more level. Friday to Monday. So that's the Sunday. Okay, so let's go on the hourly. Okay, so it's this gap right here. It looks like it's been used a decent amount right after that. As you can see, it kept trading down into it like multiple times. So I don't know. It's probably been used up. So not as important, but yeah. And we already talked about this fair value gap also being a rejection area. So actually, let's go deeper into that. So Friday, 2 p.m. Let's just see if there's a wait. Hourly again, sorry. So from 14905 to 14966. Okay, so let's look for shoot, I forgot where that was. It was Friday to Monday, right? Yeah. Okay, so 4905. Okay, so with this, the deal is that, again, if it doesn't seek like this kind of imbalance type deal, this also, this fair value gap right here, it could reject from there if it wants to. I would just expect it to go for a more discounted one, like any of the levels I outlined that are a bit lower. But, you know, it's hard to say. It's hard to say. But I would just watch these levels. If you see a reaction there, boom, go long. If it loses, so what? You lose like 10, 15, 20 points, whatever. If it wins, you could literally make like thousands, tens of thousands, hundreds of thousands of dollars, depending on your leverage and size. So, yep. I think that's all I've got for now with this video journal. So yep. This is more for just me, but I'm going to upload it anyway so people can watch it. But yeah, I'm going to start journaling this kind of stuff more frequently. And I'm going to post it on YouTube so that I don't have to fill up my hard drive with videos. So